Let's take a stock of what's happening across the globe as well, because the Japanese index Nikkei is at an all-time high level. Even if you look at the European index DAX, the German one at that, and that too is very, very close to its record high level. And if you look at the S&P as well as Nasdaq in the US, these indices are sitting at least 8 to 9 months high, because they are at the highest level that we have seen since August of 2022. Kunal, before we come to our own index, you track all of these global indices also very closely. What is your reading?
You've not seen the Nikkei chart, but if you see the Nikkei chart,
I have seen the Nikkei chart, all-time high, and the solid rally that we have seen.
The last 5 days, there are 5 gaps which are created in Nikkei, and those are big gaps which you're talking about on the Nikkei chart.
So what does it mean?
So this indicates that this is a powerful move. It's not just a move which is exhaustion. So there's a move which we say that it's an exhaustion move, it's the last leg of a rally. But this seems to be a starting move for the Nikkei index.
But Nikkei has done nothing for the last, a decade, I think. It was very, very, very range.
No, I remember, in 2008-9, Nikkei came back to its 30-year low at 8,800 something. And from there, it's been on a steady uptrend post that.
Interesting, but what about then our own index? Is it also seeing a powerful rally or something of sorts?
So I think we are tiring out some, but I think again it's a good consolidation that we're trying to digest. The last 1.5 uptrend of the indices, large cap stocks taking a bit of a backseat. So there's a bit of a churn which is happening within the large cap names. The only factor which I think could probably stall the uptrend for our markets as well as for many of the other emerging markets could be the rise in dollar index, because the correlation between the rise in dollar index with respect to the Indian market trends at least have not been very positive. We've seen the dollar index, for example, the recent one was a rise in dollar index from the December lows of 101, 102 levels, and that created a bit of a correction for our markets as well. So this time around, dollar index has bottomed out at closer to 101.5, and now we are at 103.5. So if it's just a very short-term kind of a rally, that's what you could probably trigger another round of uptrend. But if the dollar index rises up further, significantly higher, and the pace increases up higher, that could stall the rally for our market. So that's the only point of concern. But other than that, global market, the way many of these indices are breaking out, I think is an absolutely charming number to see.
Okay, that's the view coming in on our own markets. It's dying to get in a view on individual stocks as well. But let's get in your take first up, Nooresh, as to what you make of the moves that we witnessed in trade yesterday, and basis the kind of global handover. What are you working with for our markets today?
So the expectation is the same. We get into a range. 18,000 becomes a base going forward, and that's a critical price point. It's 17,800, 18,000. Till the time we are above that, the uptrend is still maintained. On the upper end, 18,400, 450 is a resistance on the Nifty. Bank Nifty is again not being able to cross that 44,000 mark. We are not seeing that leadership come in. We've not seen any of the top two, say, banks make a major move. Only ICICI Bank has been leading up, but HDFC Bank continues to struggle. So overall, getting into a range-bound move, we are seeing decent enough action on the mid-cap and the small-cap space. In the last 3 days, when the Nifty has corrected, the mid-cap and small-cap indices have not taken a hard knock. Generally, in a 300-pointer, 200-pointer down move from peak, we should see a little bit of a correction on the mid-cap and small-cap indices. It's not. So clearly, we are looking at it as a pause. And once we spend some time here, post that, we can see a fresh move. So for now, focus more on the stock-specific ideas. Let the markets consolidate and wait for the next trend.